Welcome to the Week in Review, the show that brings you up to date on the week that was. Here are the top stories. Parliament approves FDI in multi-brand retail. GMR loses case against Maldives over its airport contract. And FII inflows surge past the $20 billion mark. It's been a good week for the UPA government. Its move to allow foreign direct investment in multi-brand retail finally went through Parliament. On Friday, the Rajya Sabha defeated a motion to withdraw the planned changes to FDI rules. The government's position got 123 votes compared to 109 from those opposed to FDI in retail. While the UPA is a minority in the upper house, it got crucial support from Mayawati's BSP, which has 15 members in the Rajya Sabha. Friday's vote came after a similar one in the Lok Sabha on Wednesday. After much heated debate there, the government won with 253 votes versus 218 from those against the initiative. Despite the vocal opposition from some political parties, the parliamentary approval for FDI in multi-brand retail is likely to encourage more reform measures. The government could list bills for reforming pensions and insurance in the coming days. Moving to corporate news, GMR Infrastructure has suffered a decisive legal setback in its dispute with the Maldives government. On Thursday, the Singapore High Court dismissed a stay order on the Maldives' decision to terminate the Mali airport contract. The stay order had been passed earlier by a lower court in Singapore. GMR had approached Singapore's court after the Maldives ended its $511 million contract to revamp and run the airport at Male. Also in aviation, there are indications Air India's revival plan may finally be paying off in some ways. The airline is expected to post a loss of 4,270 crores this fiscal. That's a reduction of 43% from its losses in 2011 to 12. The number comes from an estimate that Air India submitted to the Civil Aviation Ministry. Air India's estimate says it expects a turnover of 16,600 crores. The government is implementing a plan to rescue Air India, but that's conditional on the airline fulfilling several obligations, including cost-cutting and generating revenue. And a new government initiative could bring some relief to airlines like Air India. On Tuesday, Aviation Minister Ajit Singh said the path is clear for oil regulator PNGRB to regulate aviation fuel. Singh said the Petroleum Ministry had approved the move, but it's not clear if the plan still needs an approval from a group of ministers, or when it will come into effect. At present, 3 state-run companies fix jet fuel prices between themselves. Aviation fuel accounts for about half the cost of running a domestic airline. Moving on, outsourcing company First Source Solutions has announced that it's paying back its remaining foreign currency convertible bonds. First Source says it has repaid $237 million worth of FCCBs. It funded the payback using cash reserves, working capital, an equity infusion, and even an external commercial borrowing of $20 million. The equity infusion came from power company CESC, which plans to eventually get a controlling stake in First Source. Inflows from foreign institutional investors have reached their highest level in about 2 years. SEBI data shows they have already crossed the $20 billion mark for the first 11 months of 2012. That's the highest level since 2010, when more than $29 billion came in. Cheap money from the US and Europe has been pouring into emerging markets in recent times. India has become an attractive destination because the rupee has fallen nearly 3.3% so far in 2012. And while FIIs may be pouring money into India, at least one credit rating agency isn't too optimistic about the country's banks. Moody's Investor Service has said it expects to retain its negative outlook for India's banks for the next 12 to 18 months. It said banks were likely to see worsening asset quality, higher provisioning, and lower profitability. And here are some stories in brief. New data shows Indian manufacturing has reached a 5-month high in November. The HSBC Market Purchasing Managers Index for the month rose to 53.7 in November. That's from October's 52.9. While manufacturing has picked up pace, services are slowing down. The HSBC Market PMI for services stood at just 52.1 in November. In October, it was 53.8. November's PMI is the lowest in 13 months. HSBC says holidays during the festive season may account for some part of the slowdown. And finally, Wipro's former joint CEO, Suresh Vaswani, has found a new role. Vaswani will take over as president of Dell's software services and outsourcing operations. Vaswani was previously head of Dell's India operations. And that's all we have for you. Thanks for watching.